Hello, 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 everyone, and happy Financially Lit Tuesday! Hey, y'all, back at it again with another Lit Tuesday. Today, I will be talking about getting your business out of the red. So, whatever your business is, definitely make sure that you're tuned in. For those of you that are tuning in from Facebook or wherever, be sure to hit the share button so that all your friends and family could join in on the wealthy knowledge as well. And then for those of you tuning in from the Sipping Wealth YouTube channel, be sure to hit the subscribe button and the notification bell so that you don't miss out on any Financial Lit Tuesdays. So definitely make sure that you're hitting the share button. And thank you for those that are tuned in. Go ahead and drop a comment in the comment section. Let me know who's tuned in with me so that I know who's tuned in with me. Awesome. So today, like I said, I will be talking about how to get your business out of the red. So generally, really what I'm going to be speaking about is making sure that you're pricing your products appropriately. So I'm going to break down product pricing, what you should be looking at as far as how you are pricing your product and how to move forward that way. So we're going to be making sure that you know the different formulas, quick formulas. It's going to be a little mathematic today. We're going to use a little mathematics today. So just, work with me. It won't be too hard, but it's going to be a simple way that you can use so that you can make sure that you're pricing appropriately. So what do I mean about the red? I mean at a deficit. So meaning your business is at a negative. Hey, Janice, how's it going? Hey. Thank you for tuning in. So meaning your business is in the negative. The red is bad. So for those of you that don't know, like Black Friday. So the reason why Black Friday in modern day it's called Black Friday, because we're not going to get to the other side of it. The reason why it's called Black Friday is to give the businesses that last chance to go ahead and get in the black before the end of the year. So this is the time where they come together, get their sales, and push to close out the fourth quarter with a bang. Before all the Christmas sales and things like that. So Black Friday is to say, hey, we need to get these things out of the store. We need to get in the black, meaning we need to get at a net income and not a net loss. So we need to get out of the negative. You can really get that by day to day, week to week, month to month, being making sure that you're up to date on your expenses. So you want to make sure that you know what your numbers look like. In every part of your business, y'all, you need to know your numbers. If you're in business, even if you're not in business and this is your personal budget, you need to know how much money you're spending versus how much money is coming through your paycheck, because what's going to happen is you're going to have a bunch of credit card debt. You're going to have a bunch of loans. Maybe you have to even get a consolidated loan, something like crazy like that. You have all these debts because you're at a deficit. So, and we're this live, we're going to be talking about business, but in a way you can still apply it to your personal life. So y'all get your notepads, because I am going to be dropping some serious knowledge here. This is going to be a pack live. Like I said, I'm going to drop heavy numbers. We're going to do a little bit of mathematics so that we know that you're pricing your products and services accurately. So we're really going to hit on product-based businesses because of the variable costs. Service-based is a little easier to calculate, but I'll touch on that as well. So where we really want to know where your money is going. And that goes back to your profit and loss statement, also called the income statement. So that statement is going to show how much income, revenues is coming into your business versus expenses. So that with that sheet, we're really going to be able to figure out how to better price your products or service, right? So if you don't have a profit and loss statement, I would highly recommend getting this together and getting one, or putting one together. There's templates online all over the place. You can reach out to Grand Rev. I said Grand Rev. we got you. Whatever the case may be, get you a profit and loss statement. But on the other end, so after your inventory, rent, bills, other expenses, payroll, operating expenses, whatever the case may be, whether you have a few dollars left or you're in the red and you're like, whoa, like where did all that money go? I know a lot of my clients, we get together at the beginning of the next year trying to do their taxes, and they're like, I made 150,000 this year, or I made $50,000 this year. Where did that money go? If you're asking yourself this, then then you definitely want to make sure that you're looking at your numbers at least every month. You definitely want to make sure that you have that break-even point set up. You want to make sure that everything's priced appropriately, because you could really be operating at a deficit. I have a client, when I first came into her business, she was selling her products at a loss. So she was selling her product at $5 when it cost her $9 to make each product, y'all. Like, and she didn't realize, like, oh shoot, I was giving out my food for free. Like, yeah, like it's really crazy. So you do want to make sure that whatever your product is, whatever your service is, you have to take into account that those fixed and variable costs. So yes, I'm about to get into it. So just to drop with a little statistics before I get into it, because I want to give y'all a little time to hit that share button, and I want to give y'all a little time to get your notepads and pens and pencils ready and all that good stuff. So before I really drop into the numbers, but for statistics, in 2019, there were over 442,000 brick and mortar retail locations, right? So quite a bit. Almost 500,000. So there were 2.1 million e-commerce retailers in the United States. So that's quite a bit of retailers. Over 2 million different e-commerce sites, e-commerce businesses in the United States alone. Then we have, and that's insights from 2021, so this year. Total U.S. retail sales for December 2020 was at 540 over almost over 540 billion dollars in 2020. So that is heavy, and that was during the pandemic, y'all. So, well, we kind of are still in a pandemic, but you know what I mean. Like at the when COVID was hitting hard, really. The average retail transaction is about $54, and that was in 2018. So generally, the average cost of anyone kind of going into a retail shop, whatever the case may be, is about $54, right? Then we have March 2020 to about February of 2021. So an estimated of about 200,000 businesses, like brick and mortars, closed during the COVID pandemic. So due to the COVID pandemic. So we have almost half of those locations closing. Like that's huge. According around 4.3 million businesses applications were filed in 2020. So 4.3 million businesses. So, and that was up from 24% from 2019. So there are a lot more businesses in 2020. So a lot of more people were like, hey, I'm getting into business. So we have 24% more businesses being developed in 2020. Hey, Autumn. So that is heavy. So, and you got that on average, we have 51% higher than from the years 2010 to 2019 on average. 51% higher. So definitely you have a lot of more business owners. So that's why I want to make sure that, hey, this information that I'm going over in these lives are crucial, especially this one today, because pricing your product is going to determine whether or not you're going to be in business in 2022, 2023, or how long you're going to be in business and whether or not you're going to be able to sustain. Because how we're going as an economy now, inflation hasn't even hit its peak yet. Like as far as like inflation from the pandemic has not even hit its peak. So there's going to be a lot of changes as far as how product and supplies manufacturing is going to be priced in the future. So you definitely want to make sure that you're pricing your products and your services accurately. Right now, the businesses are feeling the hit because they're having to buy from different suppliers or trying to figure out, oh, shoot, like I'm working at a deficit because of the change in supplies. But soon, consumers, you're going to feel the hit because the businesses now have to properly price their products in order to stay in business. Autumn said those businesses that developed overnight have no strategy or never even completed a product development phase. Absolutely. You are absolutely correct, Autumn. And it is crucial that you have a strategy when you're in business. It is crucial that you know how much it's actually costing you to produce that product. It's not just buying the lotion from the supplier and the bottles from Amazon, and that's it. No, there's a lot more that goes into product pricing. So you definitely want to make sure that that product development stage is actually being done, because you're not going to be in business in the foreseeable future because you will not be able to sustain yourself to be in business long enough. All right. So what we can see here is that a lot of individuals have embarked in their small business journey, and that's great. I love it. I love the new Black entrepreneurs in the community. It's great. I love the shift in and wanting to open up your own business, but a lot of you are operating like a hobby, and you're expecting it to retire you from working for an employer, so for the foreseeable future. So in order to do that, you have to make sure you're doing this stuff too. So you have to make sure you're doing the strategy. You have to make sure you have the right people on your team, right? So how do we get your product-based business out of the red into the black? If you don't even know if how much money your business made this year, then 9 out of 10, you're probably in the red. I can tell you that. Like, you're probably operating at a loss and you're spending more than that's coming in because you don't know your numbers. If you're like, oh shoot, if maybe you blew up from maybe making 0 sales and then a couple of months later you're making 10,000 and you just been pushing out orders ever since because they're like, oh, business is booming, you're probably operating at a loss. You're probably operating at a deficit because your business is moving faster than you had previously strategized for. So that's what we're going over today. All right, y'all. I'm just going to take a little sip. I've been really dehydrated today. Strategic management involves formulating and implementing the primary goal of an organization or business top management on behalf of the community or owners, based on resources and assessing the internal and external environments in which the organization or business competes. Yes, I see where you're getting at. It kind of sounds like a textbook definition, but yes, strategic management definitely is important in formulating how your business is going to operate. You definitely want to make sure that you have a strategic strategy. So there are strategic strategy templates around Google. Google's the best friend, right? So if you want to try to figure out, hey, I want to create a strategic a strategy for my business, you can look on Google, or you can get together with your accountant at Grand Map or business coach, a business strategy coach. Brainstorming implementation is a no for sustainability, right? Brainstorming to implementation. So you got to have that strategy. You definitely do. You have to break down your numbers. You have to know your numbers. It's definitely necessary. I want to get into, the numbers and everything. All right. So for starters, we're going to go ahead and talk about our balance sheet a little bit more, because like I said before, that's where you're going to see your total sales, and that's where you're going to see all your expenses. With that, you could kind of gauge, okay, how much money is going to come in and out of my business, or how much fixed costs I have. What is fixed costs? Fixed costs is those expenses that are kind of stay the same from month to month, or generally around the same price, or cost that I cannot that doesn't is not based on the product or how many products that I have to sell. So So overhead, so your rent, whether or not you sell 10 lotions or 100 lotions, your rent didn't change. Your and your payroll technically is a fixed cost, even though it can change based on how many hours your employees are working. But whether or not if you have your employee working a 40-hour work week, you have them working at a 40-hour work week, and that's just it. So that's not changing whether or not you sell 10 lotions or 100. So another variable cost, office supplies, things like that. I mean, fixed costs, office supplies that you have to constantly stock up on. Maybe printing, whatever the case may be. Those things are fixed. You have to make sure that you're taking those into account when doing your product cost as well. And then we have our variable cost. Our variable cost is by per unit base. So for my product-based businesses, this is the cost that it's going to take you to produce one unit. So it's based on that particular unit that you have or product, right? So say I'm back to I'll use candles this time. I'm looking at a candle right now. So say you're like, okay, I have a candle making company. And you could, if y'all have a specific company that you have and want me to kind of break it down, you can drop it in the comment section. Drop it in the comment section. Let me know what kind of business that you have. And I'll use your business as an example. So candle making. The jar that the candle is going into, the wax, the wick, okay, and the lid. So that and the labor that's specific to that product. Let's say this person's baking it by hand and it takes them an hour and you're paying them $5. Well, you can't pay them $5. That's definitely labor laws against that. But say you're paying them $10 an hour for that, and it takes an hour to make one candle and it costs you $5 for the lid, the jar, the wax, everything. That one candle just costs you $15 to make. Right? But that's just on variable costs. That doesn't take into account the fixed costs because you still have rent to pay. You still have office supplies. You still have other payroll, general payroll for the entire company. So your admin, those people, those are fixed costs. But your actual people that are making the candles, that could be variable. Those different, I have a P&L that could probably help me. Okay. Yeah, repairs, vehicle, maybe you're paying on a company car, all that stuff, that's fixed, but you have to have that go into how much that one candle costs. So that you have, say all that other stuff is $1,000 and you made 100 candles. Now that's an additional $10 per candle on just fixed costs. So now it's $10 plus $15. It's costing you $25 to make one candle. But you thought it was cute. You was like, oh, I want to do something for the community and I want to sell candles. Now you're selling candles for $15 a pop, but it's costing you $25 to make it. So, all right. So I'm going to share my screen a little bit so I can go drop some numbers on y'all. Let me know if this is helpful in any way, y'all. Let me know. Let me know if you needed me to use your business as an example as well, as far as the profit margin is concerned. So all right. So we're going to talk about a contribution margin. So this contribution margin is literally a quick formula having to show you what is generally on your income statement, but you can calculate this on your own as well. So, or it can be your gross profit. You either say contribution margin or gross profit. This is kind of a book term. Contribution margin is a book term that we use in accounting. But you can also, when you look on your financial statement or whatever, or what you're used to seeing is gross profit. So your gross number, and it's a little bit cut off. Let me move this lower third. Okay. So what you generally Calculating here is your total sales. So how much it like you've made selling 100 water bottles. So you sold 100 water bottles, and for each water bottle, like I said, you know how much it costs for the water to go in the bottle for, because you have a liter, the cap that's on the bottle, the container, you know, and the labeling. So maybe it costs you $2 in variable costs, and that's your total expense. Well, you sold 100 of them, so 100 times two, you expense $200 just to create the water bottles, but you made $400 in sales. So now you know what your contribution or gross margin is. How do you find out per unit? You're going to divide it. So your total contribution margin, which is your total sales, and your variable costs. Like, and I'm going to keep saying, I know I'm repeating myself, but because I want to make sure that you all get it. So we're like, oh, she said that already. So your variable cost, the cost that it takes you to make the products specifically, and then you're going to divide it by the total amount of products or units that you sold. So in this example, I said 100 water bottles. So you're going to divide your total contribution margin, which is or profit margin, which is your net sales minus your variable costs, $200 in my example. Now you're going to divide it by 100 bottles. So that means I made in profits $2 per water bottle, right? So this is just you're at the top part. So we didn't even take into account fixed costs, right? All we talked about was variable costs so far. So let's get into fixed costs. So now we have our fixed costs on the bottom, but now we're going to talk about our break even point. So our break even point is really going to give us an idea of how much money I have to make to be at zero. So once I know that, hey, once I hit zero, everything after zero, I'm in the black. I'm making money, right? So I don't have to, like, I'm doing, you know, we making money after that. We covered all our fixed costs, all our variable costs, and we still have some money left. That's how I'm in the black. I'm in business. I'm moving forward. I have money to scale my business to the next level. I don't have to close down my business in a year and a half because we ran out of money. I don't have to keep chasing to try to find a bank loan because we keep running out of money, right? All right. So our break even point. This is probably one of the most important formulas that you're going to need in your business, right? Especially for our product-based businesses. So we have our fixed costs. Our fixed costs, like I said before, are those costs that's not going anywhere. Advertising, your payroll for your admin or people that are going to take care of the general business, your vehicle expenses, utilities, that stuff. And then we're going to take our selling price, and then we're going to take our variable costs. So, and I'm going to give y'all more of an example. So our selling price is how much we're selling each unit for. So in this example, for my water bottles, I'm selling my water bottles at $10 each. That's an expensive water bottle. Look, God bless the water himself. Like, but variable costs, like I said before, it cost me $5 or $2 to make each bottle. So now I know this is 8. So, and then I have my total fixed cost. My total fixed cost is, this is my fixed cost is $1,000. So now we can divide this and try to figure out what our break even point is by the unit. So we need this by the unit as well. All right. So this is kind of an interesting display, but to give you more of an idea. So like I said, this is our revenue. These are our units. So this is to give you a kind of a better idea of how your break even point is gonna come up. So your fixed costs, these are costs that's not going anywhere. Like whether your business sells 1 unit or 10 or 1,000 or 1,000,000, like this is not going anywhere. Then we have our variable cost. This is based on each unit. So whether or not I sell 1 unit and that's $2 each, I know that that's based on this top level. So my break even point is somewhere in the middle where the rubber meets the road and I'm able to cover all my fixed costs with that, and then I'm able to then cover my variable costs without and then still break zero. So my break even point is covering um enough variable fixed next variable costs to cover my fixed costs. So my revenue has to be high enough to cover my fixed costs plus my variable. So meaning I can't have a product cost of $10, but I'm selling at $11 because my fixed cost is not gonna be just $1. It's gonna cost more than that. So you need to make sure that you're pricing it properly. To give my service-based businesses an example, if you know that you're paying your executive $20, right, an hour, and they work 40 hours, now you're at $800 for the week. And then you have your yourself that you're paying another $800, right? So now you're at $1,600 for the week. Rent, when you divide rent up, it's $1,600 by the month, but it's $400 every week. So now we're at $2,000 just on fixed costs because we're a service-based business, right? And then we're like, hey, we're gonna do somebody's website for $500. And we only have one person at $500 to do the website. We need to know that, hey, we need to have at least 4 people coming through the door at $500 websites every week in order to break even. That's just to get at zero. We're not even making enough money to scale to the next level or get anything else. We're just hitting zero. So we need at least 4 people to walk through the door. So, and service-based business, you have to keep that number in mind, because once you forget about that number, what ends up happening is run into a deficit, you run into a loss. And because you didn't bring in enough clients to meet that break-even point, you have too much fixed costs and not enough revenue coming in. All right. Hopefully everybody got that. I know it's a lot of information there. Hopefully you're okay. So to give you, I know I threw some numbers out there as well. So let me do a great can make an analogy that brought it home for me. No problem, no problem. Let me see, how do I'm gonna stop sharing. Kind of struggling. All right, here we go. So let's go to the whiteboard. All right, and we're kind of running into the 7 o'clock hour, but really quick because it is a lot of information. Like I said before, so just to give you an example, so we're going back to product-based businesses. We have our cups that we're selling. So we're a company, we sell customized cups. All right. And then we're like, hey, for 1 cup, it costs us, okay, it costs us $1. We'll leave that at that. For per cup. Right? Because we get it from a distributor, right? So now we're like, okay, it costs us $4 per cup. Now we're like in fixed costs because I have to pay employees and all that. Maybe I order 1,000 cups from this place. Now I know it's $1,000 for. Oh, let me get my eraser. For all my cups. All right. It's $1,000 for my cups. right? So we're like, all right, it's $1,000 for my cups. I have 1,000 cups. Cool. That's my cost. That's my total variable cost. Because I already have the cups. All I do is order from them and then I resell. But that's not just it in my business. I have other stuff I need to pay. Because I have a cup business, I need to pay storage. So storage is $500. Don't mind my writing. I'm gonna get better. All right, storage, right? There were like, my bad, y'all. Let me try. I'm gonna give me a stylist. All right, so $500 storage. Then we're like, hey, it's 2,000 for rent because, or we could say I use a room in my house, and I use the room in my house is just worth an extra. I mean, my mortgage is 2,000, and the room in my house, based on the square footage of my total home, is about $250 for that space in my home that I rent to my business. So now you're like, okay, it's $250 for rent. Now, and you could tell me, I'll give y'all how much do I sell my cups to break even? All right, that's the example. How much do I sell my cups? I have storage at, and we'll put it as an even number. We'll do rent at 500. We'll do rent at 500 to kind of make it a little clean. All right. If my rent is 500, my storage for my cups is 500. I purchase 1,000 cups for $1,000. What is my break even point? I'll give you a little moment to figure that out. Go ahead and calculate that. And while y'all calculate it, I'll do a little more talking based on just dropping a little more information. But I'm waiting on y'all to comment. Let me see if y'all actually paying attention here, because I want to see some properly priced businesses. Literally every single business that come to me, I have rearranged their pricing. Literally, like so. Any of the strategy sessions that I've had with any of our businesses that came to me and we talk prices, I had to rearrange your pricing. I had to tell them, hey, you're not charging enough. Your price is this. Hey, maybe you need to change your niche or whatever the case may be. At the end of the day, they weren't taking into account how much money was going to their product or service. All right. So let me know. Go ahead and drop it in the comment section. $1,000 in cups, $500 in storage, $500 in rent. Where is my break even point? Like how many cups? Oh, you need my selling price. See, y'all didn't even tell me. Look, y'all didn't even tell me you needed a well, you have your total costs. I got so you could have kind of told me, but I could give you a unit price. Well, I won't give you a unit price. I'll get you how many cups you sold. All right, so you sold you sold 50 cups. 50 cups. Oh, why did it come up like that? It's kind of weird. I thought it was gonna be darker. That's better. All right. With 50 cups sold, my cost is at $1,000 for the cups, variable cost. $500 for storage, $500 for rent. That is my fixed costs. Where is my break even point? Where is my break even point, y'all? So, just some tips. So while y'all are calculating that, just some tips to leave you off on. You can price your products better to ensure the profitability of your business and to make sure that your expenses are being met. So, those of you that want your business to go to the next level, this is something that you're going to need to do. You're going to make sure that your stuff is properly priced because you want to move your business to the next level, right? Why not? Why not scale your business to the next level? Because you're going to continuously, as a business owner, you're going to continuously have to evolve. Because if you don't, you will get taken out. Like Jenna said, I knew something was missing. Yeah, my bad. One part of it. But yes, so you'll be eventually taken out because you're not keeping up with the times. Supplies, manufacturing, all that is always changing. They're always going to change. The economy, the interest rate, all these are changing elements. So if you're a business that had the same price for the last 2-3 years, like you're in a danger zone, right? So you want to make sure that you're constantly evolving your pricing based on the economy and based on where you want your business to go next. You can catalog also known all known expenses to have an understanding of all your costs. So if you know that these are going to be my expenses every month, go ahead and write that thing down. You know, it's cool. Go ahead and write it out so that you know that these are going to be my expenses. I know that these are going to be my fixed costs. So let me go ahead and move forward. You can set revenue goals. Setting revenue goals is huge. Definitely need to, especially in service-based businesses. Like I said, you need at least 4 clients to build a website for in order for you to meet the cost, the expense at the end of the week. So if you're paying yourself, your office assistant, the building, and that's $2,000 a week, but you only brought one website at $500 in, you're operating at a $1,500 deficit, right? $1,500 loss for the week. So you have to keep those goals in mind. But my cups people, whether you sell 1 cup or 20 cups, you have to, or whatever your product is, you still have storage and you still have rent to cover. So, you want to make sure that you still are meeting those costs. I see that no one's answering the question yet. I'm going to bring up the formula because maybe y'all are like, what's the formula again? So don't worry. I'll give y'all a little cheat sheet. So, all right, just make sure you write those numbers down. Okay. Because I know y'all like, I don't really know how to calculate this. And I really want to see how y'all do on this. All right. So, all right. Here we go. And, okay. So, yes. Also, you can make sure that you're mitigating your risk. So, with knowing your break even point, knowing how to properly price your product, you mitigate the risk of your business. One, for investors to want to do business with you because you come off a lot less risky when you actually know what your numbers are and your break even point. Yeah. You come up a lot less risky. Also, on the other end, you're able to make viable, like good decisions to help move your business to the next level. You're actually able to make business decisions that's going to scale your business, that's going to keep you in business. And also when you're seeking investments. So when you want to seek investments and you want other people to pay into your business or you want funding, loans, you got to know your numbers. And you have to make sure that you're profitable because if it's a loan, they want to know how they're getting their money back. If it's an investor, they want to know how you're going to make them money. And you can't do that without not knowing your numbers or making sure your product and service is priced properly. All right. So those are my tips. Jenna said I knew something was missing. Yes, I put in the units in there. Does anybody have any guesses? Naomi said, "Oh, come on, business owners, you got this. Come on, entrepreneurs. 1,000 cups, $1,000 worth of cups is my variable cost, right? And I'm gonna break this out. My selling price you already got. Well, my units you don't have my you have the amount of units. Oh, so I gave you an algebra problem. That's why y'all stressed because y'all have to work backwards. Ooh. All right, let's bring you back to the contribution margin then. So I want to know how much you're selling your product for, right? I want to know how much you should price those cups to make sure you're profitable. Maybe this would actually be a better slide to go on. I want to know how much you should be selling those cups for to make sure that you are not in the red. And you're taking into account $1,000 worth of cups, $500 on storage, $500 on rents, meaning you have $2,000 worth of expenses. Now it's like, okay, I have $2,000 worth of expenses. I'm selling, what did I say, 50 cups. I divide 2,000 by 50. All right. All right. Got it. 2,000 by 50. So when I divide 2,000 by 50, can y'all at least give me that one? What's 2,000 by? No. Okay. All right, y'all. We definitely probably need some more work on your product pricing, so that you can do this in your sleep, and it's going to be awesome because you're going to have one product and it's going to be lit. But essentially, because it's costing you, I probably should have did 500 cups so that it's a reasonable number, because who's going to pay $40 for one cup? But you would essentially divide 2,000 by 50, because I know that, and I hate that I have to like stop sharing in order to switch over, because I have to figure out how to get to the other screen without having to do all this. Okay. So 500 cups would probably make it a lot more reasonable. Because, like I said, who's going to spend $40 on a cup unless it's a fancy cup? Hey, it could be. I'm going to leave it. All right. So, in variable costs alone, if I was just, which most business owners do, they say, "Well, I purchased 1,000 cups. I sold 50. So 1,000 divided by 50, boom." Right? Wait, but you like doing that, you're not taking into account the variable costs. You're not, because then you're operating at a deficit because you didn't the fixed cost, because you didn't take into account that it's costing you $1,000 in fixed costs because of the storage and the rent, right? So now you're like, oh, I could just sell it at $20 per cup and I could break even. But in actuality, you have to sell it at $40 a cup just to break even. And that's your break even point. So when you sell 50 cups at $40, you know you just broke even. If you sell 40 cups at $40, you haven't broken even yet. You're still at a deficit. But once you hit that 50 threshold, now you know I'm making $20 in profit after that, because all I have left is variable costs. Does that make sense? Does that make sense? So it would be X equals 1,000 divided by 50. Oh, wait, that's not divided by 50 minus 1,000. No, so you have to, because 50 is my units of cups being sold. So if I just want my variable cost, then I'm going to divide 50 by 1,000, right? And that's just my variable cost. So now that's $20 a cup is variable. Let me go back to my board. Let me change the color. Now I know $20 This handwriting is not it. Y'all know what VC is, right? Variable costs. Then I'm like, this is my fixed cost right here, but this is not broken down by per unit. But so and you're probably looking at the formula, you're like, hey, the formula told me that fixed cost is on top, and then I have my per unit pricing on the bottom. But it's not giving you how many units per fixed cost, right? So it's just giving you a total number. So now it's 1,000 divided by 20. And then I would get my 50, but that's not what we're calculating. We're not calculating how many units. We're calculating how much to sell my product at in order to make more money. I mean, to be profitable or to break even. So yes, I gave you that formula, but I technically didn't give you the formula to calculate how much money you need to sell each cup for. So it would be a backwards formula if you're trying to calculate it. But what you have here is your total fixed cost, which is 1,000. Your variable cost, which I have at $20 per cup. Now I know that it's costing me $1,000. I kind of need this out of my way. They don't give me a bigger eraser. Yeah. Okay. All right. And I'm going to just write sold smaller so I have room. Okay. Okay. So now we're like, okay, my fixed cost is $1,000. $1,000 FC. So this is my total fixed cost. But what I need is my fixed cost per unit so I know how much to sell each cup for to break even. So now I'm like 50 cups, same thing. Because 50 units. So now I know that this is 20 as well. $20 of fixed cost per unit. Why does the break-even formula do it that way, where it's just a lump sum and fixed cost? Because fixed cost doesn't change. It doesn't change. So whether or not I sell an addition 51 cups, my fixed cost is still $1,000. So me saying 1,000 divided by 51 wouldn't make sense because I broke even at 50 cups. But that's why I gave you your break even in units. But I want you to give me the break even price. So now you know that it's costing you $20 in fixed cost per unit. I mean, per these 50 cups, $20 in variable cost per these 50 cups. Now it's $40 per cup and just cost alone. But I know that once I sell 50 cups, I can I feel $40, I've got zero. So any cup additionally, I just made $20 because I no longer have to take into account the fixed cost because that was covered with the first 50 cups. Now, another reason why, let's see, maybe I can add a blank page. Okay. So another reason why it does it fixed cost in a lump sum. Say it was 100 cups. Say it was the same as this, but 100 cups. So I sold 100 cups. It was $1,000 in cups. Let me see, sold. And then $1,000, and we're just gonna call it fixed costs, right? And that's my storage and rent. So if this was the case, this fixed cost would change to $10. So that's why you can't really break it out like that. But how I gave it to you, I wanted you to figure out the price. So in this case, if I sell 100 cups, And I'm like, at the 100 divided by 1,000 cups, and well, technically my cups would be um 50. It would be actually 2,000 in this example, since I doubled the amount of cups sold. Oh shoot, that's not working out. Yeah, having a whole math class tonight. All right, after this example, I'm gonna let Jen go for her. All right, as you can see, I'm excited. This is fun. So now I have $2,000 worth of cups, $1,000 worth of fixed costs, because that doesn't change, right? That doesn't go anywhere. But now, because I only have 1,000, I sold 100 cups. My fixed cost is $10, but my variable cost, my VC, is still $20. So at this new unit sold, my product cost is $30. But I have to make sure that I sell at least 100 cups at $30 to break even. That makes sense, y'all? Y'all with me? This is why people pay accountants and financial advisors. Great demonstrations for startup businesses. Yeah. But yes, it is a lot, because you literally have to do this with every product that you have. So if you're like a business where you're like, oh, I want to launch a new line, I want to do this, that. And then as your suppliers keep changing their price, you have to keep coming up with a new break even point. You got to make sure that you're on it, because if you're not, you're going to be at a loss. And now your business is done. Your business is at a deficit, and now you got to fight for funding, and you have to try and plead. So you do want to make sure that you are doing your break even points constantly. Oh, look, I'm on the screen. So, yes, to just give you that example. Yes, it's some work, but it's like the formula is not too hard, but yes, it does you do have to do some algebra, but it can be a simple equation, especially when you talk about money. Um, so make sure that your money is right, because you don't want to be, and then you're like, oh shoot, if you're just like, hey, I'm going to sell 50 cups a month, but it's costing me $2,000 for those 50 cups, then I know da da da. So keep that equation in your mind so that you know that, hey, I know what number to hit in order to break even. Everything after the break even minus variable cost is profit. But at least you know where zero is, so that you're not operating at a deficit. That goes for people that host events. That goes for products, services, everything. Everything has, if it's dealing with money and receiving and expensing, you have that break even point, and you have to be aware of it. So hopefully that was beneficial to y'all, and you could, do your break even point everywhere, and you're like, oh yeah, I know this, da da da, and it's awesome. So definitely utilize it in your day to day. If you need a strategy session, of course, you can definitely reach out to us at Grand Web Financial, because of course we're not going to leave you stranded out here, clueless, trying to figure out how to properly price your product, and now you're out of business because you didn't go to Grand Web soon enough. So, so definitely make sure that you are reaching out if this is still like a lot, and you're still trying to figure out, hey, how do I properly price my product? So you do want to make sure that your price your prices is set appropriately, so that you can move to the next level. It's definitely necessary. And big announcement as well. So as we close out today's live, thank you for tuning in, those of you, and thank you for all the feedback. I know, like, it was a math heavy live, But like I said in the beginning, grab your notepads and your notebooks because I was not playing, as you can see. So definitely make sure that you are understanding this information. If not, like I said, book a strategy session. You can head over to our website, grandfinancial.com, and then get that booked out. Last announcement is the Wealthy Brunch. So the Wealthy Brunch is out. We will be having the Wealthy Brunch on the 21st of this month. So in a few weeks, let me pull up the flyer. Okay, I know it kind of like looks weird. We moved the lower third. All right, so this is the information for the Wealthy Brunch. Be sure you can head over to Eventbrite. I should have just populated the Eventbrite, but it's on the 21st at One Bridge and the Regency Mall. We'll be able to be having vegan food catered, also some kind of Southern food, shrimp and grits, some Southern chicken with maple, like, I don't know, he fancy, y'all. And we're going to have bottomless mimosas, a DJ, gift boxes, charcuterie board, networking, awesome guest speakers. So we have Haraka Nikki Cartwell. She has 2 foundations here in Jacksonville catering to youth in the community, and also Silent Women Speaking, and that's catering to women that had lost a child. So she's doing heavy work in the community to help others wealth up around us. Also, Jason Scott, he is a broker with Remax Supreme and also a real estate investor. So he'll also be at the brunch. And we have Alexis Leor. She will also be there as well. And she has a foundation of her own as helping women in the community. So definitely, and she has quite a few events that are coming up as well. So if you want to get plugged in with her, but you want to grab your ticket at the Eventbrite. The event will be on Facebook as well, so that you can go ahead and grab your tickets. It's in the comment section of the video or of the live, so you can go ahead and grab your ticket. There's only 50 tickets that are going to be sold for the brunch. So, and prices do go up in a couple of weeks. So you do want to grab your tickets early so that you can get the early bird price, as well as get the opportunity to network with a lot of different individuals in the building, as well as these phenomenal speakers. It's definitely going to be an awesome event, from the catered food, from the bottomless mimosas, the speakers, the whole yard. So be sure to grab your tickets for the Wealthy Brunch. Thank you all for tuning in to another episode of Financially Lit Tuesday. Be sure to tune in next Tuesday for another episode at 6:30 p.m., bringing you news, tips, and tricks on how to wealth up. Thank you, y'all. Hope you have a great day.